Okay, we're going to do a quick recap mainly of the morning trade, the morning move. We came into this day with this down close candle here on the Thursday, then the Friday swept the low and then traded back inside. So on a daily perspective, that's not extremely bearish. And then obviously on the weekend, um, events happened, and then we had a gap down, and then a slight fill of the gap, and then a move down. And I want to show you the point in which I should have been more confident that we were moving higher and not lower. So we ended up taking out a lot of these lows, so relative equal lows. And if we just shift over here to the 1 hour, you can see that we did that right away. So we did that right at the gap down within the first hour. Then we moved up into the gap, and we used this level here, this swing low, as support to head then back down lower. So that happened during Asia. Then you had that Asia move straight down, and then into London. And then here's how I sort of look, and obviously with that move down and at 3 to 4, we tapped into this weekly fair value gap, which we have tested, a couple times, but more specifically back here. And then, so what we have here is a few things going on. We have a fair value gap down and a fair value gap up here, which creates a balanced price range, right? So a fair value gap inside of a fair value gap, like opposites. And then the closure of this fair value gap here. So this one gets closed above here, okay? So that happens at 6 o'clock to 7 o'clock, okay? Now, what happens is, this is the thing that this is where I didn't see this, and I should have been more confident for an up move, is that the hourly candle close 7 to 8 closes below. So therefore, I use this candle as my target, that candle low. Okay, and then I tell myself, depending on the bias and depending on what's happening and where we are, that as soon as that gets swept, I either give myself permission to start looking for highs or longs, which in this scenario looked promising because of the closure of the 1 hour. Even though we rejected from this 1 hour, closure of the 1 hour, but a rejection of this, so 1, 2, and then also the close back inside of this range, right? So we don't know the swing low is going to form because this 9 to 10 candle has to form, but I'd say as soon as that target is swept, then we're going to then start looking lower. And I'll go straight to a 5-minute chart here. Let's go over to this one because it's got the... So we just head over to the 5-minute chart where we have our standard deviation already working for us here. So this standard deviation, okay, this is the BPR, this is the target that gets swept. So again, this happens at 825 or 855. So that low, that close below gets swept, and then we have that close back in the range here at 9 o'clock. So right there should be like the indication that we can go long. How do you catch this trade, right? Well, there's a few different ways. You can look at a 5-minute fair value gap as the close of the 5-minute fair value gap as your entry, and you would have to weather. That's like right before the open, so tough to commit to that. But you do have, so that is a sign that price is headed higher. Closure and a close below this. So now you get price coming back down. This is why we wait for the open. Comes down, sweeps that target one last time, takes out some lows, relative equal lows on the 5, and then begins to move up. So I'd say that on the 5 minute, difficult unless you're convinced price is just going to sky, right? We could go down to the 3 minute though, because once we do close above here and we start getting this kind of price action, there is the potential to take a long out of this. Let's call this order block. And you could take a long out of this right here. So that's on the 3 minute. The 5 minute also offers something very similar, right? That's the 5 minute. Okay, you draw that 5 minute box and it wicks it several times and you could take a long out of there and it would be a very short stop loss here. Okay, so there's that. And then you get, something similar here. We're stair stepping here, right? So take this box, wait for the candles to close above it, and then watch for a reprice. And then you could take a long out of here, or you could take the long out of there. You could take a long after this candle closes nice and strong out of that. You don't have to do it right there, but after this candle closes above it, and then you also have, Asia high that you could play off of, okay, at 1135. A lot of these levels, unless you're catching them straight as they run through, tough in my opinion, but we have 2 standard deviations now at play. So we get the 1, 1.5, we start to accumulate. This -1 also acts as some, a level that we can trust to move higher, right? After we get the closes above. Because here I'm not really, okay, we can take it if you are trusting this price action, you're taking it, saying that's the -1. But once we get up here and then we come back down, and then you get that we're bouncing off the -1. We have the orb here, so the orb high, the Asia high, and then -1 there. So 2 standard deviations that we can follow, because that London standard deviation also, I don't know why it's not on here anymore, but here to, can't remember if it was there to there. Did I have that on there right? Anyways, I hope I do. It kind of looks like it's here. So maybe it got played out already. Oh, right. Yes. My apologies. Okay, guys, sorry. Yes, this we were playing, and the push up then went to the 4, and then it was dancing around the 6, and then eventually went through the 6. So we have this standard deviation we're playing, and then this one that during the session I don't think we even drew it on there. So anyways, that is basically the morning's trades, and then in the afternoon, if you're looking at structure itself, we see this high that was a fair value gap through. So once it comes back and retests that, if you can find yourself a trade within this. So this lunch range I always draw on from 12 to 130, price comes down into this fair value gap, into this high, sweeps that low, and then you get that, but then you get the engulfing candle back up. So that is a potential 5-minute entry for you there. So anyways, I hope that's helpful. Let me know if you have any questions. Have a great evening.